Hi, Jonathan York from May Financial Partners, looking at investment markets. Certainly the new year started off pretty interestingly. The latest data coming out of the US appears to sort of indicate that inflation is on its way down. That was a New York Fed survey that indicated that inflation was running around sort of 5%. Now, if you look back to sort of early June last year, that figure was above 6%. Now, on the jobs front, it's still running reasonably hot. Latest employment data came in with 223,000 jobs created versus expected around 200,000. But what was interesting was that the wages actually fell. So the rate of increase in wages was starting to fall, and that's a pretty big plus point for the Fed. Indeed, there is even some talk now from a couple of Fed officials out there that potentially are now looking at a 25 basis point hike. Obviously, the last hike was a 50 basis point. That came on the back of several 75 basis point hikes. So if indeed we do see a 25 basis point hike, then clearly the Fed appears to think that it does have inflation under control, and it's now just a question of sort of monitoring that through and getting to a sort of neutral level. Now, obviously, where that neutral level is, it looks like it's going to be around sort of 5.1%. So it would be pretty interesting to see later this week. You get the latest read on the US CPI, and again, if that still shows a little bit of a reduction out there and a downward path, that's going to be very interesting to see how the equity markets take that. Also, as well, obviously, we've got earnings coming up soon as well, and it's going to be interesting as well with certainly the backup in equities over the last sort of 3 to 6 months. Certainly, those PE ratios have come down to pretty reasonable levels. And even starting to see a little bit of support out there for some of the beaten up tech stocks. What was quite interesting, Tesla over the holiday period announced its deliveries. That was up 40% year on year. But still the share price fell 12% over the course of the day when that result was announced. Now, obviously, 2022 was a pretty horrendous year. The first time in 50 years that both stocks and bonds have fallen by 15% or more over the course of the year. Obviously, still quite a bit of talk about recession, and if indeed the US does slip into recession, it'll be the most predicted and talked about recession in sort of 50, 60 years. And what is quite interesting as well is that 10-year rate. That's backed off from sort of 425, currently trading around 361. On the political front as well, we finally got the sort of farce over in terms of trying to select the Speaker of the House. That took 15 rounds for Kevin McCarthy to finally get elected. Also, as well, obviously, we've still got the ongoing war in Ukraine, and it's just going to be very interesting to see how that sort of plays through, because we're coming up now to sort of its 1 year anniversary. So for a conflict that Putin thought would last maybe 1 or 2 weeks is now going to drag on to at least 12 months. Oil sort of holding in around that sort of 75 bucks on WTI. And the UK is certainly still facing some pretty tough times. You've got plenty of industrial disputes out there, and you know, in the middle of the winter as well. It's just going to be interesting to see how it does sort of play through, because you know, certainly there looks to be still some pretty tough times ahead. Now, interesting in France, President Mitterrand is now talking about increasing the retirement age. You know, that's you know, politically very sort of sensitive, and certainly met with quite a bit of resistance out there. But you know, just sort of looking at the, you know, the cold hard numbers out there, retirement age does need to increase. So interesting in Australia, the Reserve Bank in December actually looked at potentially pausing on its rate hike scenarios. Now, in the end, they just raised by 25 basis points, but it's quite interesting that we're even considering a pause and waiting to see how those sort of recent rate hikes have sort of impacted the economy. Because again, certainly at present, the Australian economy seems to be looking in you know, pretty reasonable shape. Now, here in New Zealand, obviously, you know, the sort of holiday period has been sort of dampened slightly by the horrendous weather we've had over the last sort of couple of weeks. And it's just going to be interesting now to see how that does sort of play through for the rest of the sort of summer months, because you know, we really expect tourists to sort of come and sort of visit New Zealand and spend, you know, lots of money. But obviously, if you know, the weather patterns are really aren't playing ball, certainly a lot of the campsites have been washed out and are now sort of sitting empty. In a time when traditionally, you know, they will be packed and you know, sort of full of holidaymakers and tourists spending money. Also, as well, 2023, we're now in an election year, and you know, the government's got some pretty tough decisions to be made, because they've already announced that the fuel tax levy will be put back on to fuel at the end of January. So potentially that, you know, just sort of increases the cost of living pressures out there. It's still obviously got a major sort of labour shortage as well, and you know, the sort of changes to the immigration and visa before Christmas really seem to have had very little effect so far. Was that possibly because they were too late coming to the party? So house prices do continue to fall, and it's just going to be interesting to see when the Reserve Bank meet in February to see if they do increase interest rates again. But if you are looking for income options, there's plenty of alternatives available out there. Go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.